Hello, everyone. My name is Vikas Aggarwal. I'm a professor of entrepreneurship and family enterprise here at INSEAD, and it's a pleasure to be hosting today's webinar, which is part of the Tech Talk X series, sponsored by Digital at INSEAD and by INSEAD's lifelong learning team. Now, INSEAD's Tech Talks are both technical and business talks presented by leading technologists, thought leaders, industry practitioners, innovators, entrepreneurs, and academics. And these talks tend to span a wide range of topics on both emerging and existing technologies, providing technology-specific insights as well as management, business, and societal perspectives. And if you'd like to have more information on some of the upcoming talks, you can go to digital.insead.edu. So before we jump into a discussion with our four panelists, I'd like to spend a few minutes briefly walking you through some of the results of our most recent survey of global entrepreneurs and VCs. And the objective of the survey was really to take a pulse of the entrepreneurial ecosystem, both in MENA as well as globally, to understand how entrepreneurs and VCs are coping and adapting to the ongoing pandemic. So let me share my screen here, and let me just jump in. We'll of course have our panel discussion in a few minutes. I'll introduce the panelists in a few minutes, but what I wanted to do is just give you a little bit of a preview of some of the main findings from the survey. So this is a survey which we just recently conducted in January of this year. Both of startups and VCs. And the goal really here was to provide some reference points for stakeholders in the entrepreneurial ecosystem. How can we help startups navigate the ongoing crisis? And the secondary goal is to offer insights for governments. How can they define policies that help technology ventures tackle some of these short-term challenges like liquidity shortages, scarcity of VC funding, but also foster the ability of startups to capture some new business opportunities. So let me start by just giving you a sense of who responded to the survey and who's included in the survey. So we had about 99 respondents that were startups. And as you can see from this graph, they cover a wide range of locations around the globe: North America, Europe, the Middle East, Southeast Asia. Similar coverage from the VC sample, about 44 investors that responded to the survey. Here, this is a little bit more weighted towards North America and Asia, but also coverage from MENA as well as Europe. So maybe to begin, I think it might be useful just to get a sense of the pulse, right? How worried are investors and founders about the current state of the economy, about the impact of COVID? And what we see here is we look at how confident, right? How worried are investors and startups? From 1, not worried at all, up to 5, very worried. And what we see is that both investors and founders alike are actually moderately worried about the impact of COVID. So not in the worst case scenario, not in the best case scenario, but investors maybe being a little bit more optimistic than startups, but overall moderate levels of worry. What is the time frame? So if we look at what most respondents say, really the modal response is that we're going to get out of this situation probably sometime toward the end of the year, toward the end of 2021, the beginning of 2022. So the most common response was Q1 2022 in terms of when we expect to exit this crisis. Now, what's a little bit surprising here is if we look at what startups and investors expect to happen after we exit this crisis, is a pretty high percentage. So 77% of founders, 70% of investors that believe that we're going to head into some sort of recession or even a depression in 2021 leading into 2022. And really only 20% of founders expect that this crisis will just have a mild impact on the economy. So while we may be about a year away from this, right, there's some concerns about what will follow the end of this crisis. Now, what does this meant, right? So one of the questions we asked related to the degree to which this crisis has disrupted what these startups are doing. And while there's a small percentage, or about a third of the startups that say really our startup operations were unaffected, over half of the startups surveyed reported that their operations were significantly disrupted by the crisis. And we have a quote from one of the VC partners in the survey, right? This pandemic really created a forced reset for many of these companies, right? They had to go back to basics, focus on some of the fundamentals of the business, and assess whether or not they needed to pivot their strategy. And we can see some of this as we dig a little bit more deeply into what startups have been doing. What are some of the anti-crisis measures that they've taken? So changing products and services, changing their business model, right, from a strategy perspective. So these are really the fact that they've been forced to work remotely, think about this new environment has really caused, for at least a reasonable percentage of these startups, the need to shift in their strategy. The other piece of this is how they've responded operationally. And I think what's interesting here is that they focused a lot more on renegotiating contracts and hiring freezes rather than salary cuts and layoffs. And of course, what has a crisis led to? It's led to revenue declines, delays in development. These were some of the most common themes, right? That how has the crisis affected you up to date? And then going forward, right, we still see a big sense among the startups that there is going to be a continued revenue drop. 57% projecting a revenue drop, only 17% of startups projecting a revenue increase going forward. And one of the big issues here is talent. And I think this is an interesting one, because if we look at layoffs, right, about 40% are saying really there's going to be no change in staff levels, so no plans to lay off staff. And in fact, about 38% of founders plan to recruit more, with 9% even planning to double their workforce in the coming months. From a fundraising side, to some degree, this has led to a slowdown fundraising. Only about 18% of founders have claimed that COVID has had really no impact on the fundraising side. So this has led to slowed fundraising, unresponsive investors, in some cases, perhaps even canceled term sheets. And about 25% of founders plan to delay their fundraising plans until the end of the crisis. So in 2020, only a small percentage, about 10% of founders actually accelerated their fundraising plans. And one of the big challenges here tends to be in the earlier stages, the seed and Series A rounds, and a lot of the questions here, this might be something that we can touch on with the panelists a little bit later, is where are some of these fundraising challenges being felt on the spectrum of the development of the startups. From the investor side, a lot, about 42% say that there's really no change in the investment mandate. A small percentage also saying, well, maybe we think differently about what industry do we play in, what geography do we play in. And one of the interesting comments from one of the entrepreneurs here was that this remote online working experience has really opened up a lot of international investors to the prospect of looking outside of their usual geography. So as this entrepreneur suggests, if before investors from London, Boston, or Silicon Valley wouldn't look to the UAE, now they're maybe putting some of their allocations to ventures abroad. And this has been facilitated by things like some of these online board meetings. Valuations, on the other hand, seem to be relatively unaffected by the crisis. If we look at the majority of valuations, right, these are kind of expected to increase, or have seen an increase over time. And really, this is a function of the availability of capital and the supply of capital flows. The kind of last slide is just really government, right? What are startups, what are investors asking for from governments? And really, a lot of these requests tend to relate to issues of cash management. So in response to this decrease in revenue, investors and founders really expect governments to assist with things like bridge funding, payroll support, perhaps even tax exemptions. So these are some of the most commonly requested measures by startups. Other areas involve loans, loan guarantees, rent relief, and venture debt, largely to tackle things like cash flow and liquidity issues. So again, that was just a very quick preview of some of the insights from the survey. We'll be posting the full survey in the coming days. And again, you can go to digital.insead.edu to find the results of the survey over the coming days. So let me now turn to our 4 panelists, and what I want to do is kind of introduce the 4 panelists that we have today, and start off. We start off with Dina. So Dina El Shanufi, who's the Chief Investment Officer at Flat 6 Labs. So Dina has over 15 years of financial services experience managing venture capital and investment portfolios in the MENA region. Prior to joining Flat 6 Labs, she worked as a senior analyst for Al Ali Capital Holding, where she managed a $200 million oil and gas portfolio. She also held the position of portfolio manager at Beltone Asset Management, where she co-managed a $28 million MENA regional portfolio. Next, we have Laila Hassan. Laila is principal at 500 Startups. So Laila joined 500 Startups in 2019 to lead the firm's follow-on strategy. She has experience in investment banking, private equity, venture capital, with her primary focus being due diligence and later stage deals. Prior to joining 500 Startups, Laila worked with several VC firms in the MENA region, including MEVP and Algebra Ventures. Next, we have Roberto Croce, as Managing Director of Microsoft for Startups MEA. Roberto has over 20 years of experience working for large technology firms like Microsoft and Google. And over his career, he's really tried to bridge the gap between corporates and startups across more than 20 countries, developing solutions that solve real-world problems. And currently, as Managing Director of Microsoft for Startups, Roberto is building out Microsoft's new division from scratch and spearheading its expansion and innovation strategy. And finally, we have Victor Kiriakos, who is General Manager for Careem UAE. And Victor is passionate about creating and scaling innovative and commercially viable businesses. It's a challenge that he has tackled from a number of different angles, which I think he can talk to during the panel, as an investor in a corporate setting, in a startup setting, as well as across a number of different industry verticals, whether it's telco, media, or banking. Prior to Careem, Victor worked as Managing Director for Flat 6 Labs in Abu Dhabi, Precinct Partners in Dubai, and General Manager of MediaQuest Corp in Dubai. So to kick off the panel, what I thought we would do is, of course, ask each of the panelists just to introduce themselves, and make a few opening comments. And the first topic I'd like to tackle is actually a relatively broad one, and I want to kind of maybe ask each of the panelists to comment on this question. So we're now about a year into the COVID crisis, and needless to say, everyone in the startup ecosystem has had to adapt significantly as a result of the crisis in terms of how they advise, fund, and operate the startup companies in which they're involved. But as we've adapted to this new world, we've also learned quite a bit, right? And really just the first question I want to start off with is, what have been your most surprising insights and learnings as you reflect on the experiences over the past 12 months as we've all gone through this crisis together? So maybe we can first turn to Dina, and then Laila, and then we can just kind of go in that order. Roberto and then Victor. So Dina, your thoughts, kind of a year into the crisis, what have been some of your most surprising insights here?
So I recall March 2020 when I think all over the world we were discussing hundreds of daily cases, and it felt like the apocalypse is upon us. There was such a panic attack. I mean, honestly, I remember sitting on my living room couch thinking Egypt has yesterday reported 75 cases, and thinking that's it, it's the end of the world. It must be, it's going to be zombie world. And everything came to a standstill. Humanity came to a standstill. But then somehow now we're reporting thousands of cases, and everyone is moving on with their lives as if and life just moved on. And so I think the number one thing is just on humanity at large, it's far more resilient than we like to give ourselves credit to. And so within that, one can anticipate that even businesses are sometimes quite more resilient. I think back in the day, I think we had a huge scare that everything would collapse. And I think what happened, and maybe I like to think of the Middle East as having its own timeline, and then there's that overlay of the timeline of COVID, right? But our timeline was very different to the rest of the world because we actually started from a very low base, and when Corona hit, we as a very nascent ecosystem, we were still actually exploring. I think we were still in our very nascent days, early days of exploring technology and its powers. And there was, I mean, maybe I'm the eternal optimist, but at some level, post the initial panic attack, what eventually happened is that a lot more people realized they need to be a lot more connected, not physically. Digital is the long term. And so if there was initial, I mean, there's been that, and Victor can confirm, and Layla as well, there's been that initial excitement about entrepreneurship at large in the Middle East over the last 7 to 10 years. It's the new hype, it's the new word that everyone's using. But I think the last year has shed light on the necessity for us to support it and for the necessity for us to move digital. And so it's been a harsh year. I think it will remain to be tough times for quite a few. But I think what happened is that because we started from a very nascent base, the general momentum and inertia of the ecosystem generally expanding. I mean, just before Corona, every single government was dedicating funds towards entrepreneurship. And so that momentum was different from a very stable ecosystem that the dynamics are all the same, and then they suddenly get hit, because we had a very different sort of pace of growth that might have had a bit of a bump. But on the whole, I feel like things are moving. Again, I think there's been huge amounts of agility from all of the entrepreneurs that I have witnessed. Some had it worse than others. But I think all in all, net, I think we're doing fine. And I think somehow it actually, I would hate to ever reduce or undermine the effects of Corona on us as humans at large. But I think net in terms of our industry, it's been almost more positive than negative.
So we've discovered a lot about ourselves and about humanity, which, and yeah, it's been surprising how quickly we've adapted. Layla, your thoughts on this question, kind of, you know, for you, what have been some of the most surprising insights and learnings?
Thank you. So I think, yeah, for me, the kind of the most surprising insight with regards to our ecosystem is the adoption. I think typically when we're looking at the MENA region, we understand that like we're still looking at kind of the first wave of technology, and it's going to take some time to increase kind of the penetration levels, etc. But I think with COVID, this has really pushed technology and kind of, I think, gained MENA as like 2-3 years of still kind of internet penetration that otherwise we would not have experienced. So so looking even at Egypt and kind of this adoption penetration, like previously you used to look at internet penetration or smartphones, but now we have become well beyond that and looking beyond that into applications themselves. So for example, looking at Facebook accounts, which have reached like 49 million accounts in Egypt, WhatsApp 29 million, you have even 42 million, sorry, and then Fawri, like just looking at the users on kind of that and going into applications as opposed to the general vanity metrics has been very interesting indeed. And I think this kind of pushes, like as Dina mentioned, there is this hype for the past 7-10 years, but then now you're seeing even a much bigger hype, because first you've realized that technology is the only way to kind of give accessibility across the markets. And also you're starting to see a lot of talent that are trying to get into this business as well. So definitely the adoption level has made us very excited to continue to invest in the region and show that it's still very promising.
Okay. Thanks, Layla. Roberta?
Sure. So thank you so much for inviting me, and looking forward to the conversation. So to your question, I agree with Dina and Layla. I would quote Satya when he said back in June, I think, when he said that we saw basically in 2 months 2 years of digital transformation happening. And we really saw that. So it's which is for me, we've been talking about the positive side of it for now with the previous comments, and this is surprising. It's also surprising somehow on the negative side of things, which tells me from an entrepreneurial perspective, that there is still something to work on when it comes to the mindset of adopting technology just because of external factors or necessity, rather than really having a long-term strategy or having a vision around it, rather than just reacting to external events or crises that could always happen. So I agree with the point that the hype around entrepreneurship in the region. I've also had the privilege to live in this part of the world for a long time, so I've been witnessing that myself as well, so it's great. But it's true that probably the times are more mature now because there is a real need and necessity for governments and countries in this part of the world to diversify economy and move from being mainly oil-based in some of the countries around in the Middle East to be more knowledge-based, right? So, and you can do that by leveraging technology to scale and to give access to people. Let's not forget, in this part of the world, that despite of the COVID, or regardless of the COVID, still there are countries with 80% of the population that are unbanked. There is still a serious issue with financial literacy. There are entrepreneurs that are trying to address these problems, but still it's still at the beginning somehow of the journey. The ecosystem is still nascent. So my wish is also to see as times become more mature, governments really pushing the agenda when it comes to entrepreneurship and adopting changing policies or adopting new regulations. My wish is, though, as well, that we do our contribution, we give our contribution to evolve also the mindset that comes with entrepreneurs. And we have entrepreneurs that focus on real problems and try to solve those with technology, and we can really make an impact. And part of it can be driven also by the way we measure success, right? So we should also have that ambition, I think, in this region to move ahead from what I call vanity metrics in terms of pleasing someone and showing that there is momentum or effort, to real metrics where we measure the real impact of entrepreneurship in economic growth, in social impact, in creation of new jobs. But net, I'm also positive. In the startup ecosystem, there were issues, in my opinion, that were already there before COVID. Not thinking about the crazy valuation we have seen, in 2019 and even before, right? So, I guess there is, and what COVID accelerated is this focus on profitability, sustainability, which is great. And so I'm positive about the future because there are a lot of positive signals. And there are a lot of problems that are out there to solve to make an impact on society.
Okay, thanks, Roberto. Victor?
Yeah, thanks, Vikas, for having us. So look, in general, I am also an optimist. So, during COVID, I've engaged with a lot of startups, a lot of corporates as well. And what I felt is that, again, COVID was an accelerator of transformation. It translated into, and the people that really took it and flip it to turn it into an opportunity were people that were resilient. I think creativity was pushed to its limit. People trying to figure out what they can do with their current business to adjust and adapt quickly so that they stay alive. And then it showed quite a lot of people the importance of technology. Speaking to corporates that used to not look into that as not being serious about technology and digital transformation, you start seeing them quickly wanting to engage with startups, do their own e-com play and what have you. So again, like from a positive perspective, I think we have now startups and entrepreneurs that are much more resilient, much more creative, that will grow their technology arm. And at the same time, I think there is a support that will start becoming more visible from corporates and governments. To give you an example, as I joined Kareem like 4 months ago, and I looked at what the company has been doing during the COVID time. That impact translated into a transformation. So Kareem took COVID from a positive perspective. We've accelerated the launch of a super app. we saw growth in multiple verticals, which were more on the mobility of things, because mobility of people basically was very low, let's put it this way, due to lockdowns. And again, that's the experience. It's just like the approach that you take when you're faced by a crisis. And I think entrepreneurs and startups have the right mindset to turn this challenge into an opportunity. And eventually, I think post-crisis will be in a much better place, more competitive businesses, more resilient businesses, and then longitude will of lifespan of these companies will grow.
Okay, thanks, Victor. I actually want to pick up on one of the things that you mentioned, Victor, and maybe ask some of the other panelists, right? Which is really the relationship between startups and corporates, right? As we think about this broader ecosystem, and I'm just curious, for the other three panelists, and from your perspective, has COVID kind of really turbocharged, given that corporates and startups are kind of all in this together, right? We're facing this completely new world. Has this turbocharged the degree to which corporates and startups engage with one another and the ways in which they engage with one another? Just curious, as given that you've all looked across a portfolio of startups or worked with multiple different companies within that ecosystem, what are your views on that? Lila, from your perspective, do you see a lot more interaction among the startups in your portfolio and what's going on the corporate side?
For sure. I have to say, over the past year and a half, there has been a lot of interest from corporates to kind of be introduced to our portfolio and kind of see synergies or ways to cooperate. And definitely during COVID, I think a lot of the corporates that we talk to, either, especially as 500, we have the accelerator and kind of the development arm as well, in terms of also services as helping with corporate VCs. So there's a lot of corporations as well that are thinking of having, or already establishing, having someone there to kind of look at the relevant tech businesses that fits with their profile to help them stay in the market, or even use them as different marketing channels for their products, etc. So there is definitely a clear need for that. And then it's very interesting that when you start speaking to corporates, and then you hear someone saying, yeah, it's very important to go very early to the market and don't make it perfect, which is the minimum viable product that we have been discussing in such a long time. So they are, getting into this ecosystem, and it's great to see that it's expanding. And by the same virtue, you can also say with venture capital and private equities, with private equities also kind of going into the space as well. So it's no longer kind of a vacuum space that we're trying to do something, as it's becoming more inclusive.
Right. And Roberto, just curious from your perspective, I mean, kind of from Microsoft, of course, right, and thinking about the relationship with startups, how have things changed over the past year in terms of what you do and what Microsoft is doing?
Yep. So actually, this is a great point you're raising, because actually where we are differentiating in our approach to the ecosystem is exactly in trying to bridge the gaps between startups and corporates. So Microsoft works with most of the largest corporates or enterprises globally, not to mention, of course, the small medium business segment, but talking to corporates. So the opportunity there is being exposed to challenges and use cases where corporates are really struggling, right? So if you have the digital transformation agenda open in the discussion with these corporates, definitely startups are relevant, because a way to allow these corporates to go beyond the exploit of the main business to the explore of new opportunities, and in an agile way, could definitely be looking into startups, because chances are some startups out there have solved for that specific use case, or have the capabilities to build a POC or build a solution for that specific use case, right? So that comes handy. So I slightly disagree with Lila in the sense that we constantly receive requests from corporates saying, hey, can you help us? We want to launch a new accelerator. Can you help us with that? And the first reaction is always kind of, okay, why? Because we can help in many levels, but why would you want to open an accelerator, right? So, and sometimes you understand that sometimes is a pure PR thing, meaning my competitor is doing it, so I don't want to sound, I'm not as innovative as my competitor. Sometimes it's pure investment. Sometimes it's really is more a long-term strategy, but very few cases. I was talking with the CEO of one of the largest banks here in the region, and he was saying, look, at the board level, we are sold on this. We are sold that startups are a good way for us to invest and being more agile and maybe do more innovation. The problem we have is when we take this to the ground, our management teams are not able to execute on this. Probably it comes also for many reasons, right? The way people are measured, the way you're looking at success factors and KPIs and so on and so forth. So changing an organization is always difficult. So to me, when we talk about corporate startups, there is always this thing that most of the times the conversation is still stuck at the matchmaking. And honestly, that's the easiest part. Especially in a world where we can access to globally to solutions, right? So it doesn't have to be limited to this region. So there is abundance of great startups there globally with great solutions and great technology and great ideas already. And it's not a challenge to matchmake business challenges or use cases with startups. The challenge starts later, because at the end of the day, these two entities do not know how to work together. Startups, we think about startups as being agile and being able to develop things at a fast pace. They don't have the alignment structure that a corporate has to, that would prevent many things. They have an informal communication that prevents the bullshit we have in corporate world and, the politics and so on and so forth. True. But most of the times you see that startups are not able to navigate complex corporate organizations. They don't know how to navigate the stakeholders. They don't know how to leverage the sponsors that they have. They don't know many things, like they have not figured it out before starting working with the corporate that they need access to certain data that the corporate is not giving them, and all of a sudden all the process gets stuck, right? On the corporate side, the corporates are always looked as dinosaurs or elephants, right? We always use the unicorns and the elephants. And if you think about it, corporates sit on reserve of cash that are higher accumulated and complex than are higher than venture capital funds. So if they would deploy those reserve of cash in a smarter way, they have a potential to start investing in startups in a different way. The thing is, they might not have the governance and the commitment to follow through once they start working with startups. There was a case of one of the largest retail corporates here, and they were telling me that basically since they onboarded some startups to do some specific POCs, then there was basically no commitment from the top, and basically they had probably one meeting every quarter. And so the startup was not receiving the right mentorship and access to different levels within the corporation to really make things happen, right? So to me, it's very interesting. It's wonderful because the proposition there is great. If we bring a fresh innovation to corporates to solve specific challenges, and if we enable startups to access to markets at the end of the day, so opportunities to tap into corporates, it's a beautiful ecosystem, because that's also innovation. It's maybe incremental innovation, but that's really awesome, right? The challenge still is in having the right partners out there to enable the startups and corporates to really work together and to really, to really measure the value of that, rather than just, oh, I connected the startup with a corporate, good luck.
Yeah, I want to bring in Dina to the conversation and kind of maybe, any comments, from your experience, do some of the things that, Roberto, Victor, and Lila have said kind of resonate with your experience, or, what is kind of similar, what is different from your view?
So I think I wholeheartedly agree with Roberto. I think the old extractive industries that we've seen in all the previous decades and in the 90s and 80s, these are companies that are very hard to change their mindsets. However, I think, again, being the optimist, we're seeing a lot more change in stance from these organizations. One, on a global level, I think there's been a huge interest. Even the actual major tech corporations, the ones that have all the tech capabilities, are now, every single one of them is developing some form of either a corporate venture arm that allows them to go and fish the best of the startups and think of technologies that can be embedded into their existing technology, into their existing platforms, rather than having to reinvent the wheel, understanding that probably the agility that happens in terms of innovation at the lower and smaller levels are probably far more than what they can achieve now. Google is no longer a startup, right? Google is probably now, and the Microsofts of the world, they're no longer startups. They probably now are becoming quite heavy themselves. And so just the transition into, I mean, the number of companies that you think of now are having special arms dedicated because they recognize that the top level management cannot be itself dedicated to supporting innovation and to looking at it. They create those spin-offs that are very independent units within these companies to look into how to innovate. Now, the technologies and the big giants around the world, they understand innovation. But I think there's also been major developments. I mean, if you think of it, the banking industry has always been traditionally also a very, very discrete industry. They're very closed off. They're very set in their ways. But if you think of it, I mean, one of the biggest tech programs around the world is the Barclays program with Techstars, and then Flatexabs managed to do it briefly with Barclays towards the end of their days in Egypt. And so the banking industry is now realizing that if they keep resisting the change, they'll just be gobbled up because it will happen outside of them. So they have no choice but to sort of embrace it, because otherwise they'll really become obsolete very quickly. Similar in even oil and gas industries that are requiring innovation. The FMCGs, you see a lot more FMCGs. I've seen a lot more FMCGs that are keen on innovating and thinking of tools within the industry. It's still, I think, in its early days, probably more earlier in our region, and unfortunately I see a lot of it as CSR programs, whereby, again, because of the buzzword of supporting entrepreneurs, that's the thing that everyone wants to put a brand name on. But I think these are initial steps into getting more and more engagement with these corporations to get there. I mean, another impressive idea is that if you think of it, the aviation industry has long been one of the humongous giants and elephants, and every single one of the OEMs now has a venture arm that looks into innovative solutions that they can embrace and bring on board, because they realize the cost structures. I mean, if you think of it, all of those extractive indices as well, they're exceedingly facing very, very tight margins. Every single one of them is. And so they're very keen to optimize. I mean, now they think of innovation, not even just from the conceptual idea of how important innovation is, but it is now becoming a lot more, I don't know if the word is needed, but dire for their survival, because every single penny in innovation is required. So it might be in its early days. I agree with Roberto, but I think we'll be seeing a lot more. And I think whereas we used to have to go and try to sell so hardly innovation to corporates, I think now we're starting to see the opposite, whereby you have a lot of the traditional industries coming in, knocking on our doors and saying, what can we do? I mean, we had one of the biggest medical and health conglomerates in Egypt come and say, you know what, we want to run an accelerator because we realize there's a lot of innovation that needs to happen in our systems, in our administration. How can we incorporate it? We need to cut costs. So I think all the industries are now picking up that it's becoming a necessity, not a luxury anymore.
Okay. So one of the things I want to maybe turn to, maybe switching gears a little bit back to the original discussion, which was about kind of the kind of direct impact of COVID. I think all of you kind of were very optimistic in terms of your views on how we've adapted, the change in mindset. I want to kind of focus a little bit on, given that you've all looked across multiple different startups or worked with different startups, invested in different startups. What are some of the challenges? What are some of the biggest challenges that have happened, right? We get situations where it's been difficult to adapt to the crisis. And what can you maybe just give a couple of examples of those and what we might be able to take away from situations in which startups actually haven't been able to adapt well? Maybe we can, Dina, if you want to take that, then we can turn over to Laila, maybe then Victor.
I think the worst of it are the ones that unfortunately had a business model or were in an industry that has been largely obliterated by COVID. these are really the worst. I mean, the companies that were, for example, based on tourism or travel, the companies that were somewhat based on contact, they had a physical component at the time when people are trying to reduce physical contact with strangers. These have unfortunately been really impacted. I mean, a global company like Airbnb is probably having major tough times, and you think of those companies, and it becomes very difficult to advise them, because it's not that they can do a minor pivot into their business model and say this can change. It's not just a minor change or a minor tweak in business model. It's the fundamentals of their business that has been heavily impacted and almost reduced to zero. Those are unfortunately have been the worst situations, whereby then they get into that phase where it's very difficult, because they really have two options. They can either say, well, we're going to switch and become a completely different company, but then to do a switch as extreme as such at such harsh times, and if they don't have the right funding, it's very destructive to the entire culture of the organization if they suddenly have an entire team that they need to reallocate to a new product. Or they have the other option of saying, well, you know what, let's just deplete resources and try to actually to downsize significantly and just stay under the radar and hope this entire thing will blow over and we can come back. But then the problem with these companies is that they're burning cash. They have nothing to prove. By the time it's over, they have very little to build upon, and so they're still in a bad situation. And so I think these particular industries are the ones that had the worst, that have unfortunately been hit the worst in the past 12 months.
Yeah. Leila, would you sort of see similar things in your portfolio?
For sure. I think we do have, I know we have some of our portfolio companies that unfortunately we had to kind of write them down or write them off, even merely because they are in the travel, specifically industry, in luxury kind of home visit verticals, where it was inevitable for the company to float, and spent a lot of time with the idea of downsizing. I think just to add another layer on that is a big part of it is also how the company is funded. So companies that have been in the travel, etc., but were fortunate enough to kind of close a round or some sort of a bridge prior to COVID, they were able to kind of maybe focus more on technology and kind of pull in those resources that are let down from or let go from other companies, and kind of using this year of just building the product, etc., to kind of come out of that stronger. And we also have a few companies of that sort. So this is from the company's perspective. And then now we need to look at the VC perspective. So VCs, I think once the COVID hit, there was kind of a halt position of, do we continue to make new investments, or should we just hold on to the cash and kind of give more lifeline to the existing portfolio? Again, this depends on kind of the vintage of the VC and how much capital it still has available to deploy, etc. So there's also a VC situation as to whether it has a good cushion of cash, so can definitely go ahead and kind of pick a lot of companies at good valuations because of the current situation. But VCs that have been tapped into and kind of just have a minimum kind of need to sit and prioritize which companies should they kind of extend their runway and try to boost. And definitely on the third level is VCs that were trying to raise funds. It has taken them a lot longer than they had anticipated because of also like the fundraising, obviously, and the visits, etc. So it's unfortunate in the startups that are in specific verticals, but also just the funding itself. Kind of LPs have been affected on different things, whether stock market or oil and gas or whatever. But so they've been affected on multiple things. So this kind of amplified and trickled down the problem down to the startups as well.
And maybe just to push on the VC side a little bit, I mean, are you kind of in a situation where you kind of have to think more about maybe shifting strategies or kind of focusing more on certain startups versus others? I mean, has kind of the overall portfolio and investment thesis strategy changed quite a bit, or has it kind of been, let's continue the investment strategy, but how much of a shift has there really been in your overall investment thesis and investment strategy?
Sure. So honestly, one thing that I really like, I'm really proud of 500 for is during the time of COVID, we started seeing some of our portfolio companies that already had term sheets and kind of things from VCs, and kind of have the VCs pull back on the situation because understandably of those priorities, etc. We kind of made sure to stick to our words regardless of all this situation, because this funding typically takes a long time. From our Falcons perspective, last year was the maximum of our initial checks. So all the capital that we had in the fund was earmarked to follow-ons. So we could have easily prioritized our existing portfolio and kind of being able to tap into that. Other interesting things that we've seen is some VCs kind of reaching out to their LPs and pulling in a pool of capital to kind of deploy to some of their portfolio companies that fit a specific criteria. So I've seen VCs being very creative with how they're trying to fund and keep their portfolio companies afloat.
Yeah, Victor, maybe just from your perspective, as we think about some of the challenges, right? So you recently joined Kareem, but kind of have sort of seen the effects of COVID through multiple lenses, through multiple different organizations. Just curious as to your perspective on, what sort of settings may have been most challenging to adapt to as you look across these different settings in which you've operated.
Yeah, I think one thing that is for the startups in our region, they're very consumer driven. So it's not about like having a deep tech type of solution and being able to adapt it. And that's why like those guys have had when the market went offline, right? Like there was no market. These guys weren't able to pivot, and that's why a lot of them, crumbled. Compared to other startups where they had, let's say, one of the startups that I'm working with, which had like an AI technology built in-house for the hospitality sector. When COVID hit, the hospitality sector was out of business. However, that startup was able to leverage the same technology for a different use case and was able to kind of survive the COVID impact. I think that's kind of also something around resilience, where a lot of the startups that you see in our region are more of consumer facing, and if that market goes away, then they don't have another choice, because what are they going to sell? So I think that's one of the insights that I got working through local and international startups, is that you need to have that deep tech USP type of it protects you. That's one of the learnings that I had.
Sure. One area you want to kind of touch on before kind of opening it up to the Q&A, and by the way, for those in the audience, please keep putting your questions into the Q&A tab. We'll kind of get to those just in a couple of minutes, and you can upvote the questions that you think should be upvoted. But I want to just turn to maybe this question in terms of policy, right? So do you have any kind of thoughts or recommendations as you kind of look back at what governments have done over the past year or so? What has worked well? What are the things do you think that governments can do to continue to support the startup ecosystem going forward? So maybe just kind of a general question to all four of you, or anyone that wants to take that.
I think, look, I'll take a stab at this. I think, government have also faced a reduction in revenue, right? And basically they're also under stress due to COVID. However, you see two approaches. One that is, we're gonna support you, but at the same time, you see quite a lot of alternative way of making compensating on that revenue loss. And I think that there should be a balance between those two, and some government in the region that are a bit more advanced are taking that into consideration, while others are not moving as fast as they should. Yeah, because at the end of the day, the government has to have a much longer view, long-term view, than a corporate or a startup. And I think that's kind of what is needed today, because a lot of people are under stress. A lot of companies are under stress, people, all of that. That's my 2 cents.
Yeah. Oh, go ahead, Laila. Sorry.
No, you go ahead.
Oh,
So I think.
Go ahead. Go ahead.
Okay, thanks. So yeah, honestly, I think the governments, especially in the Gulf, I think have really put in efforts to kind of try to support the companies. So we're seeing things like chipping in to pay part of the salaries for some corporates, giving loan breaks for up to a year. So no, there is definitely a push there to kind of not necessarily infuse capital directly into the companies, but actually kind of make, trying to reduce their burn rate as much as possible. So, and that's from the COVID perspective. With regards to technology, I'm actually, I'm really impressed by some of also what the governments have done. So the sandboxes that have been taking place, so whether in Bahrain, Saudi, and UAE, we have a lot of our companies that have graduated those sandboxes, and we've seen really how the governments have stepped in to enable those companies and grow, as well as in Egypt now with the discussions of the sandbox, also some companies there. So honestly, I think. Definitely, this is another elephant that we have in the ecosystem, but slowly but surely trying to get there. I think in terms of recommendations, we keep saying that you know, MENA as a region, we can look at it as maybe as a country and have companies kind of expand into those different countries easily for us to grow. So to be able to compete with the likes of companies that are in the US, such a big market. So I think if there is some way to kind of unify the setup process and requirements that for businesses to kind of expand and go beyond different countries, it would make it a lot easier and really support those startups to grow. So things like Saudi, for example, the SAMA license, and how now you can do it in a couple of days, etc. So these kinds of initiatives are really helping startups, and definitely there's more room to go. But I just really want to recognize those initiatives that have helped.
Mm-hmm. I want to maybe Roberto, kind of get back to you in a second, but maybe I think that ties in nicely with one of the comments and one of the questions that was raised here. Maybe just kind of want to bring that into the discussion from Christian, who asks, who says, startups are only as good as their people. There's an imminent risk of the best talent being lured away in a brain drain to highly funded Silicon Valley startups. What do we in MENA need to do to shift the power balance of tech talent? And you know, that may be, I guess, a function both of government policy as well as things that private companies can be doing. So maybe Roberto, do you want to kind of maybe comment on kind of the government question, and also maybe take that one as well?
Sure, I love the question. It's a great question. So sure, absolutely. So I agree with the previous comments on this is a region that is largely government-led when it comes to investing into the startup ecosystem. So no point there, right? And a number of initiatives have been taken already, and a number of new ones will be rolled out soon towards the ease of doing business, reduce the burden on the burn rate and the cost structure and so on and so forth. So I'm positive there. What I would challenge though is, you know, what is the ambition? What is ambition and how that ambition is going to be measured? So what is the, you know, what are the metrics that really matters? Because from my point of view, we are far from having the two things speaking or being aligned in the ecosystem, right? So agree with the point that usually startups here get developed or funded here in the UAE, and then the natural evolution is tapping into Saudi, is a larger market, and so on and so forth. You are a fintech, yes, you have the sandbox, great, it's awesome. The work that Bahrain, Saudi, and the UAE did is fantastic. But still, if you are a fintech in the UAE, for example, you need to comply to 5 different regulations at least. Then if you need to expand in another country as well, there is no cross-border payment. So MENA a region? No, it's not a region. There is, of course, a cultural, you know, fil rouge, and there is connection, of course. But if you are a fintech entrepreneur starting from here, yeah, you have courage, right? It takes a lot of effort to expand, right? So my point would be policy should be around also empowering the ambition of having businesses here that would think global day one, not just expanding from UAE to Saudi, in my opinion. And that's where the help of technology would come in. And the investment should be early on in youth, in skilling youth, and we need more engineers, more people with tech, more women in tech, more women engineers, women who code, and more of the youth that, you know, understand technology and they know what to do with technology. A lot of the pitches today, AI is used as an accessory when you buy a car. They say, by the way, my solution is powered by AI. And maybe you don't even need that, right? So the ambition, in my opinion, is what should drive them before we talk about the policy. What is, because here the real strength of this ecosystem is that governments have a long-term vision, right? So if I compare to my origin country, if they have a vision for next year, maybe it's enough. So it would be a great result. But here you have a strong leadership in government. You have visions 50 years from now, 40 years from now, 30 years from now, which is beautiful. Now, what's the ambition then? Is ambition just allowing a measure to develop a sandbox and have a startup expanding from UAE to Saudi easily, or 30 years from now we are talking about something different? So investment should be long term, and actions should speak with words in terms of enabling people, youth, and the new generation across the region to understand technology. I agree with the point Victor made before. One peculiarity of this region is that it's mainly consumer facing. So the moment you have a crisis, that definitely those sectors are going to suffer, even if myself as well, and we have been working with startups in travel that have been able to either pivot their business model or rethink partnership in a smart way, at least to extend the runway and have enough to have more time, buy more time, right? To build something different. We have some great stories there. But these were startups that either were able to rethink the business model and look at partnership from a completely different angle, and that implies you need to think differently, or startups that were using deep tech, but really, so to be able to leverage that to develop some other components or some other proposition to customers in a relatively fast period of time. So they had the capability. So behind that, they also had a kick-ass team, which is basically at the end the secret sauce of being able to pivot. So in terms of policy, I guess a lot has to be done when it comes to empowering the next generation of people in the region to skill them and to understand technology, in my opinion, and also to make it easier for entrepreneurs to set up here, right? So it's still, most of the people, especially if you take UAE, for example, UAE residents, would they consider UAE their home? Maybe yes, because you are living here, but you are not a citizen, and there is still a lack of incentives that would allow this this chance to fail fast and to develop more. And we need more engineers for sure, more people that tap into technology. So the policies should be around that, but should come out from an alignment on, okay, we have a vision 50 years from now, then what's the ambition, and how can we align the real KPIs towards this ambition? And then we talk about which policies need to be implemented or changed in order to sustain that.
Okay. Yeah. So we're kind of running close to time. Maybe I just wanted, so Victor wanted to get in. Maybe kind of Victor, give you the last word on this before we.
Yeah, just on the just on the talent piece. Today, yes, you have to build your own talent, but working from home has enabled all of us to be more effective at working from home, right? So then your talent pool becomes the world, right? So tapping into different talent pool across different geographies makes sense. We have adapted to it because of COVID even more, and it's cost effective as well. So I think, yes, we need to build our own talent, but that's in the short term, you can leverage a lot of talent around. And that's what we've been doing at the Karim as well. Okay,
fantastic. All right, so I think we're actually at time, 60 minutes, kind of very short time period to cover all of the things that we'd hoped to, but certainly a fantastic set of insights from these four panelists. I just want to thank all four of you very much for taking the time to share with us your thoughts and your experiences over the past year. As I mentioned, we'll have the survey up very soon, and please go to digital.insead.edu to find out more information on our upcoming tech talks, as well as to see the full results of the survey. So thank you once again, Dina, Lila, Victor, and Roberto, and look forward to continuing conversations with you as things continue to evolve in the coming months.
Thanks,
So
Vikas.
thank you all.
Thank you so much.
Everyone.
It's been a pleasure.
Thanks.
Thank you,
Bye-bye.
everyone. Bye-bye.